the new week. In 60 minutes, the U.S. markets will open, and I'm going to attempt to tell you what stock to trade. I think it's Pfizer. PFE is the ticker symbol. I'm going to give you several other ideas. And quick disclaimer, I'm not a licensed financial advisor, educational purposes only on these ideas, just my own opinion. I could be crazy. But for today, for the opening, I just think that Pfizer is a stock worth considering. You'll have to do your own due diligence, take your own risk, and so forth. But hear me out. Why do I think that? I'll give you an idea of what other stocks might be really interesting, not just for today, but for the coming week. So I'm going to share my screen and we'll jump right into it. Thanks for chatting in. I've already got somebody. I just saw the chat come really quick, and okay, let me quickly look at that so I can respond to it. We've got Helen's there. Hey, and soon. Hello. Helen mentions last week we should have checked DyeCorp, Halliburton, or Blackwater. Yeah, yeah. I do wish we had the 1 week time machine. Jump back and okay. But one thing we do have this week is that the markets are looking significantly more bullish. That is what that's my estimation anyway of just by looking at what we see going on right here. These two charts, the NASDAQ E-mini futures, NASDAQ 100 futures on the left, and the Australian dollar, Japanese yen pair on the right. These are 5-minute charts, so a whole lot of data going all the way back to the overnight start of this week's session. Notice what happened here. NASDAQ jumped higher. That's significant because the NASDAQ already ended higher on Friday before, right? So it's like, hey, there was a bunch of buying going on at the end of the week. And to start this week, they said, let's do some more. Well, at least at first. Since then, it's sort of flattened out and is holding. On the Aussie yen side, however, it's not just flattening out. It's continuing higher and higher, breaking new highs right there. I believe that the Aussie yen is an indication of global investors' attitude towards taking on more risk. So if there are global investors interested in taking on a little more risk, that's what that upward trend would suggest. It might be that NASDAQ stocks, which are famous for providing a good risk opportunity for investors, could see a little more money come into them. And it's not just that means, okay, quick, go buy NASDAQ stocks. It means all stocks in general, because whatever happens to the NASDAQ kind of drags up the S&P 500 and the Dow Jones Industrial Average and all those. But that being said, the NASDAQ stocks are actually very interesting right now. But I'm under the impression that Pfizer might be an even better opportunity, at least for today and the next couple of days. Now, you could look back and say, well, what are you talking about? Pfizer would have been great back here, right? And it's true that it looks like we've kind of topped out, except that in the pre-market trading right now, Pfizer is making one of the more significant gains and having a more significant portion of early trading volume. So the price in the pre-market right now is $50.41. That's up $1.69 from where it closed, 3.5% change, with 961,000 shares traded already. Now, think about this for a second here. I got to do a little bit of chart work. Let's see. We're going to put that scale on a new left scale, and it's going to make the volume appear a little higher there. Okay. So this is the typical share volume for Pfizer. You could see that it trades pretty heavily, 20 million shares a day. And because it's PFE, because there's just three initials in the ticker symbol, you know it's not a NASDAQ stock. It is a New York Stock Exchange stock. What that means, I mean, there's really not too much difference nowadays, at least in terms of the price movement. But generally speaking, the New York Stock Exchange stocks tend to not move as fast or as far as NASDAQ stocks. So if Pfizer is up 3.5%, see, it's up to 50 and middle 50s, right? Pre-market. That's clear up here. And that move, that jump right there, that's unusual for a New York Stock Exchange stock. Now, the volume of 961,000 shares is nothing compared to what it normally trades. It's, even just 5%. But pre-market, NASDAQ stocks are a lot easier to trade than New York Stock Exchange stocks. So the idea that a NYSE stock is getting a lot of pre-market trading activity, 5% of its typical daily volume, at least back here. Lately, the volume has been much, much higher, right? Is very significant. And I mean, it's Pfizer, so you know what the news is all about. You know what's driving this, right? It's all just COVID and vaccine and that kind of news. But let's have a look really quick here. Well, maybe this doesn't have anything to do with COVID-19. No, it's there. It's right here. Pfizer secures contract for additional 35 million doses of COVID-19 vaccine from the UK government. So that is driving the news higher. Also, just for good measure, 15 minutes after that news headline broke, Reuters announced Pfizer is to buy a cancer drug developer, Trillium, in $2.3 billion deal. Well, one of these two has got to make you like Pfizer, right? Or at least pay attention. These are going to be big headlines. And even in the pre-market, they're driving the price to, well, about as high as it has ever closed, right? So this is a potential for a breakout. And when you get to stuff like a blue sky breakout, that's where, you hit a brand new high, then there's a good potential for it to just keep going. Look at what's happened both of these times where Pfizer has hit, 52-week highs. So right here, you break, and then what do you do the next day? Then we break higher, big move, pull back. This break over that one, followed by another higher run, followed by another higher run. See, that's the pattern we're looking at. Now, it's true, the full break would be way up here, but this was it opened, ran up, and closed down here. So above the old close, if we open above that, then we're gunning for that. I mean, investors who thought this was too high, and I got to sell it down, so many buyers aren't worried about that. The deal has changed. This new news has come out and said, oh, Pfizer could be a more valuable company than we have been thinking about. So there's not a big surprise that it's starting right up here, because that's the last place that optimistic investors thought that Pfizer was valuable. So if they're going to start right there, then where are they going to go? Well, we know they went here for whatever reason before. So it's a good bet that traders are going to see if intraday they can get it up to there and maybe sell it down. Now, it's also the case that as soon as the market opens, this could just tank and be terrible. I mean, I'm under no illusion that I know precisely where it's going to go. I'm looking for stocks, though, that have this pattern of, hey, if they break out into a brand new high, that they do keep going. And Pfizer has that pattern. Plus, they got a couple of news catalysts. Plus, they got a whole lot of volume hanging around in here. Look at this. All these people that sold right here and here, these are big volume days compared to what Pfizer normally trades. Those people who see the price come running way up here, they might change their minds and say, yikes, I shouldn't have got out. I need to hurry and get back in, right? All that kind of dynamic could play out. So how would I think, just in my own personal opinion, that a trade on Pfizer could be set up? That's what I like to do here in the paper trade. So I'm going to go there. For those of you who have been paying attention, every time I pull this thing up, we see this Microsoft trade. I'm still not letting it go. In fact, as soon as I hope somebody will remind me before we get done. I don't want to lose track of what we're doing on Pfizer here, but before we get done, I want to actually raise that stop on Microsoft, not aggressively, but just Microsoft. I thought that trade was going to be done last week, but Microsoft got down and bounced right back up, and that's what we do. See, we just wait every time it does this sort of thing. We raise our stops under its most recent low when it breaks the new high. So that's a lesson I want to talk about and show you at some point. But for now, let's set the order up on Pfizer. Now, the reason I'm setting up the order, why not just buy the stock, go? Yeah. Hey, if you're a serious trader, if you really understand that making profits isn't just buy, you only live once, throwing it all in, back up the truck, buy with both hands, whatever, and then just hold and pray, and maybe you're rich or maybe you're done. Who knows, right? Look, if you understand that that's not really going to keep you in the trading game very long, and that kind of style, so to speak, of making trading decisions doesn't have a really longer term expectation for success, then you know that you need to come at whatever trading strategy you take with a particular strategy. My strategy is I like to find trades where I can win most of the time. I recognize that by making my trade setups like this, I'm not necessarily assuring myself of profit. I'm just winning the trade. Over many trades, I might break even. But I look for a little bit of an edge so that I do go profitable. And if I trade for quick, small, consistent wins where I win most of the time, then I can just incrementally move my account forward. Now, I know that in order to make that happen, I have to accept occasionally larger losses. That is to say, comparative to the size of wins, right? I'll show you how that happens, but this explains the trade setup I'm about to try and put on. I'm interested in trying to do two things. One, have the possibility of grabbing a quick profit, and two, having an outlier possibility, a diminished possibility that I could still be in the trade even if it takes off and goes higher. And here's how I'm going to accomplish that. I am going to take twice as much price risk as I am profit target. However, I'm also going to make my profit target just big enough so that it's unlikely I'm going to, take that profit in a single day. What I want to do is I want to see that stock jump up close to the profit target, but not sell me out. And then I can say, I'm going to remove that profit target, move my stop loss up underneath. I'm just going to trail it higher and let it go as long as it will. That's what the Microsoft trade was all about. Now, instead, I'm going to try to set that kind of situation up on Pfizer just in case Pfizer keeps going. I kind of don't think it will. I kind of think it'll run up, make a new high, and then sort of languish and go sideways. But you never know. So I got to create this where both I could take advantage of whichever one happens. So this is how I'm going to do that. I'm interested to recognize we see Pfizer, 50/11 by 50/20. So it's come back down off of its 50/40 now. But above 50 is where it's sitting. So yeah, I'm gonna be interested to buy it wherever it comes in. I think there's going to be some fluctuation here. I don't think this is just going to hit and go. So I'm going to call it right at 50, a limit order, and I want to be in at $50 per share, exactly even. And you say, well, why don't you buy 50.01 because it might not make it to 50, or why don't you buy 49.99 or whatever? Now, I think there's going to be a lot of orders flow at 50, and so it's going to be easy to be able to just slide in with them. So I'm going to go in at an even price in this situation, and the take profit and stop loss orders that I'm going to set up. Well, I better put those in. All right, now where am I going to put my stops? I don't want to go any lower than this right here, 48.27, 48.25, something like that. I'm going to go 50, 48, 25 is 175. 175 pips. Oh, sorry, whoops. 175 pips on the stop loss. 175. There we go. And then half of that is going to be 380. We'll call it 90. Yeah, actually, no, I don't want to put it that high. I want the take profit to be right up the top there, 51.90. So we're going to go 190 here for take profit. That means I can go a lot bigger for my stop loss. So I kind of want this trade to go faster, but I am going to set this trade at 380 for my stop loss. And so that brings the price clear down to 46.20. My expectation is I don't want to hang around till it's 46.20. If it doesn't run up there and challenge the new high, then I probably just want to find a way to gracefully exit before I even hit my stop loss. But price starts moving fast, I don't want to think about it. I want to automatically be out one way or the other. So if the price runs up and makes a brand new high today, I want to take my profit right there. That's why it's sitting right there at 190. And if it goes down to 46.20, fine, I'll get out. If in fact what it does is just sort of, it gets up here and closes at a new high, but doesn't challenge it, great. That's what I want to see, actually. I want to see this thing come in and start trending higher in such a way that I could raise my stop first to here, then to whatever my purchase price was, and then you can just trail it on up from there, right? That's what I'm looking. But this big area, this $3.80 stop loss, that gives me the time to let Pfizer make its upward trend and continue its upward trend, if in fact it's going to. This, on the other hand, this take profit order, if that thing runs up and goes to $56, yeah, I'd like to get that, but that's not my style. I'm going to take the profit today if it hits 51.90. And the longer running trend, that's just going to have to come in slower for me. That's the way I set this up. Now, why do I set it up this way? Well, because it's worked for me in the past. And the truth is, if I can get a fast profit, if I can get that fast profit every day I'm trading, I want to take that. If, on the other hand, I get I wait and the price starts trending up, I want to get a better, percentage gain out of that. So I'm willing to wait a few more days to let that big percentage gain trail in. Now, I am the first one to admit Pfizer's already had this huge run up. So this is a little bit of a risky trade, but that's all the more reason why I like the idea of giving it a lot of room, at least comparatively for Pfizer. Okay, 600 shares. This is based on like a $250,000 account. So it's got, day trading capability and, it's an IRA, so I don't have to worry about taxes. That's the kind of account I'm imagining and assuming that I would be interested in putting this trade on. If you were doing this trade in something less than a $25,000 account, then you probably wouldn't want to put the take profit on. You probably just leave it off and mentally note that, because you're going to have to wait for it to go overnight and make the trade anyway. You don't want to accidentally get kicked out just today, right? If you were doing a trade, if you were working in an account that was a lot smaller, you would also do a lot smaller quantity of shares, right? Okay, so this one here I'm setting up as about just under 1% of risk, and therefore I'm going to go ahead and set that order in the pre-market. We will see if it fills. Okay, now, as I mentioned before, because I don't want to forget this, let's go back and look at the Microsoft trade, or at least the chart of Microsoft, and see what we can do with it, because that trade is phenomenal. It's just been going. I've been holding this trade for a long time, and it's time to raise the stop loss, right? So right now the stop loss is sitting back here under at 271 or so. That's actually 273, but when it broke up here, came back down, and then made this new high, we moved the stop up to that level. Now, when it moved to there, we coulda, shoulda, woulda, moved this up a little bit higher. But I was pretty concerned about what was happening the rest of the way. I really kind of thought this is very strong. The next move was going to be open here and come way down. So, I didn't want to move the stop up, but now I do, because not only did we defend that, we broke through brand new blue sky high. So we can go either here or even right here. I think right there is where I want to be. 288.50. I'm going to change that to. So I'm going to come in to my area there, and I'm going to modify this stop loss. Let's see if I can make that happen. Stop loss, we're going to go 288.50. And see if that modifies. Yep, there we go. All right, that's great. So now I've locked in at least, I bought it at 278. I've locked in at least $10.50 profit, assuming I don't get gapped past that number. I'm not going to raise that stop again until I see it hit whatever high it does. If in fact, assuming it keeps going, I think it will. Let's see, where did it close last? 304.36, and it looks like we're still in that same spot right there. I'm not quite sure if this number is accurate, but anyway, the point is that if Microsoft comes back down and then turns around and makes a brand new high, breaks above that, or if it goes up and then consolidates, and then it has to break whatever, has to do this kind of thing, make a new high, come back down, and then break the new high in order for me to be able to move the stop loss higher. So in this case, going to go up, break, go again, and then I'm going to hit the new stop loss, whatever it is. I anticipate that that's going to be above this gap, so I'm hoping for that, because that would be a nice additional $12 in profit. Like I said, it's been a fantastic trade. We'll see how it goes. But that's the sort of long running kind of trade. I like getting these, boom, get out, get it again, boom, over again, unless it's going to just grind slowly higher, in which case then I want to be very patient and let these moves really happen. Microsoft's not only grinding higher, it's accelerating right here. That worries me. That makes me think that, hey, we've got the top of the market coming soon. But I'm not ready to call that yet, because I don't see enough other evidence that a real top is in play. I think people were worried about the Delta variant and the new COVID. And the number of COVID cases are really on the rise everywhere. It's true. But dirty little secret, don't tell, a lot fewer people are dying this time around, like a third fewer people. I mean, that's really, really, in historic pandemic situations, the second wave is often more lethal than the first. This is completely the opposite. Nothing about COVID-19 has followed historical patterns or predictability or any of that. So it's the market is kind of picking up on this, I believe, because it really hasn't. It got nervous, but it hasn't just panicked. Instead, they sort of saw, they look back at 2020 and they think, oh, we didn't need to sell everything down like that. And so I feel like people are saying it's got to be worse. We've got to see it much worse than it was before we as investors decide to panic. We're not going to make that mistake again, right? I think that's kind of where the market is. Like, fooled me once, but now I'm not going to be fooled again. And I mean, maybe the market should be selling off. Maybe there's incredible risk. Maybe it's a bad idea to be jumping in. But I don't see any investors taking up that idea, that second idea, that, hey, this is a bad idea. We need to take our profits. Not seeing it. How would we see it? What am I looking for? Well, I'll tell you real quick here. This XLU. Yeah, XLU has this big jump, right? That's the beginning of it. But in general, XLU, the utilities um, sector ETF is, oh, sorry, that's what I want, not keeping pace with SPY, at least not yet, right? See, so yeah, we had this one big day on utilities, but look at how long and how far utilities have lagged behind the S&P. So utilities went up 1.25% on Friday, and the S&P went up 0.8%. So utilities did outpace. If that keeps happening, then we'll have the evidence. I mean, one day, it's just one day. And meanwhile, even though it was one day, utilities are way behind the S&P 500. So see this whole little bit right there where S&P drops and utilities kind of surge, that's the beginning of people moving to safety. That was the Delta variant nervousness. But the fact that they jumped up here and these went with it means I got to admit that means that the Delta variant isn't over yet. The fear of the Delta variant isn't over yet. But that was Friday. If I look at this chart right here and I see Aussie yen continuing higher, Nasdaq's dropping to a breaking through the low. That's interesting. Then I have a hard time believing that the Delta variant has scared anybody yet, enough, right? So anyway, Nasdaq coming down. Oh, that's interesting. Now, what are the other ideas, right? We talked about Pfizer. I'm going to give you a few other ideas that came up on my screener and why I think that they're worth considering. NVIDIA, Spotify, and Macy's. Those are the three that I think are really interesting. And I want to walk you through those ideas because they might be even better ideas than Pfizer. Let's start with NVIDIA. All right. For the longest time, NVIDIA was sideways back here. And then after its more recent earnings, it made a jump and then kind of acted like it was going to go into a new sideways move. But now what we have is earnings came along and so the stock split. So it's not this $500, monster thing anymore, right? Then earnings came along, and earnings actually weren't bad news, but interestingly, it was a lot of back and forth. Earnings were quite good news, but well, let me see if I can show it to you here. Yeah, so this doesn't show how good they were. I'm sorry, I can't remember it. Last week I read it, and I was surprised when I read it. I was surprised that people didn't feel that they needed to buy the shares anymore. Well, really what that was is all these guys in here that caught this or had been holding it for a year or more and said, we need to take our profits. But then once that was done, up goes the price, right? This right here, I think, this stock and this move, more than almost anything else out there, is why I think that this move on XLU and the Delta variant fear that appears to be the markets is just not going to last. Because if that were the case, this stock people would be worried about, oh, does that mean, silicon factory shutdowns? Does that mean all sorts of other problems that plagued the semiconductor industry? That would be bad if, we were going back into lockdown and so forth. Well, no, people are plowing in. Look at that volume on the day after earnings. You expect that, but the next day after that, driving it up to its old highs. This is similar to the Pfizer situation, but it's for completely different reasons. It's technology related. And if NVIDIA is going to do this, then you can bet we're going to see some move on AMD. AMD is really interesting because that big run up, and then we've been consolidating. Check out this volume. See, we've been going at kind of this pace for volume. All of this move, huge high volume situation. And it had also good earnings, right? But it kind of got ahead of itself. It came back. This is what I've learned from the penny stock world, And I don't know if it would happen here, but I think it would. And that is that all of these extra interesting people are people that are extra interested in whatever's happening on AMD. They're hanging around. They jump in, but then people start selling off because, hey, come on, that was a big move. You've got to take some profits, right? So they take these profits, but they're not going away. Look at all of this, even when it's sitting down here, and that little doji right there, look at that. That's twice or more than twice its average volume from all this period of time. When you get a whole bunch of people showing up, and then the party, the fireworks are over, and you think, oh, the party's going to break up, but the party doesn't break up. People hang around, right? Then that means something exciting could be yet to take place. We could still see something move. And in this case, this is one of those incredible, beautiful flag patterns that this makes me want to run and check out Guy Cohen's OVI indicator. Guy's a friend of mine from a ways back, and he has this, I don't know if you've heard of him, Options Made Easy. He's out of London. It's a nice little indicator, proprietary indicator that he has. And I gave him an interesting observation years ago. And based on that, he thought, I need to do some work on my indicator, which he'd been using for years and trusted, thought was good. But after my conversation with him, he felt like he needed to dig in because he had an idea of how he could improve it. He spent over $1 million researching the data to try to figure out how to make it better, and he made it even better. I mean, it didn't change how he used it; it just made the data for it work even better. So that's always a fun story. And every time I think about flag trading, because he's a big flag trader, he actually did some research to prove that flag trading was a statistically viable edge. Most price patterns do not have an edge. And if you don't trade flag patterns with all of the right characteristics, it doesn't have an edge either. But it is one of those patterns that could have an edge if you follow the other characteristics. I'll have to talk about what those characteristics are someday, at least, what he showed in his back test that he shared with me. But I can tell you this much. The volume, the added volume, that's part of the flag move up. When the flag is consolidating and coming down, you want to see that volume drop. But when you see it break out, you want to see that volume increase. If it does, then there's a very good chance that a move like this can be revisited. And so NVIDIA is breaking out. That's chips. AMD is chips. And both of those two are associated with the cryptocurrency mining activity that goes on, and so real possibility as crypto has started up that these two are, increasing sales, and that when I say crypto has started up, I mean restarted, right? I mean, kind of especially Ethereum and the whole decentralized finance class of stocks. Maybe I should take a minute and look at those before we get done this morning. But let me finish my thought here. If AMD breaks out, if NVIDIA continues going higher, then I think AMD will break out. And if we break out of that flag pattern there, I think that's a fun indicator for what could happen. So NVIDIA looks pretty good, but it's got a lot of inertia, for lack of a better word. I mean, it took a lot for it to get this high. It split, so it came back down. This is a 4-for-1 split. Wow. And there's just a lot of shares out there that are now going to have to be traded in order to get it to move up significantly higher. I like NVIDIA. I love it as an option trade. Not sure I love it as a share trade. But if NVIDIA is going to do well, AMD is probably going to do better. So that's why I'm making that connection. The next one down that list, though, was Spotify. Let's have a look at this. Oops, not pot, spot, S-P-O-T. There it is. Okay. Now, this is not a happy looking chart. This chart looks terrible by all other indications. The earnings news were bad, as I mean, it was better than expected. It was, not as bad, but they're bad. They're making losses. This is Spotify. By now, they ought to be, turning a profit. We already did the "we're not losing as much as we expected to" news. Investors don't like what's going on with Spotify, despite the fact that it's $220 a share. They've been selling out. But notice what happened here. We had earnings, it dropped. And then it just sort of inched up and people were kind of trying to buy. But then all of a sudden this. Let's check the headlines real quick here. Okay. They announced they're going to do a buyback plan where they're going to go buying back their own shares. Now that is interesting. That really is, because what it says is finally investors sold this company down so much that they the company officers think that the best investment that they can do with their money instead of buying some other company is to buy their own company. Now it might be that they're all like, we got to stop the bleeding. We're all losing money in our stock funds against which we're borrowing money to buy our big, Long Island houses. I don't know. But whatever. The thing is that they had decided to go ahead and risk company money by trying to buy back shares. So let's assume that it's not just them being stupid and saying, we got to buy our own stock so our stock goes up. So our, that would be really idiotic, because that would just mean that they were delaying the inevitable and it was going to tank even faster. So it's not only, ingenuous, dishonest a little bit. Dishonest. They're taking the risk, so it's not really a matter of honesty. But if they're, by doing that, they're telegraphing, hey, this is we think the stock is a good buy, when in fact they think it's a terrible buy. They're just trying to keep other people buying it. Right? That would be the dishonest part. I don't know these people. I don't know what they have in mind. I don't want to know, because if I do know, then I think I know the future. And that's a terrible way to trade. I would rather look at the chart, look at the trading setups, look at my own rules. I have a much better chance of making my trades work out more effectively if I'm assuming that I don't know the future. I don't know the people and the personalities and the fundamentals of the stock and everything. Those things, I believe, are illusions that make me more willing to hang on to a bad trade. That's all I see them as. In any event, what I can say just from the price pattern is investors have really been not interested, selling out. Look how high it got, okay? 387, and then down here, 201. That's like 45% drawdown. That's pretty big. And lots of other stocks have had that, but that is enough. That much of a drawdown is enough to change the valuation metrics of the company. And the company's saying, well, where should we be putting our money? We got all this money coming, or available to us anyway. They're losing money, but how do we grow it? What's the best way to, make our choices about investing? We could be buying other companies. We could be buying equipment. We could be hiring new employees to invent new things, to sell new products. We could sell brand new products. We could do whatever, right? What are our target for each of those possible choices? Well, let's say this could earn us that much, our estimate, and so forth. Estimate. But given that our stock price is this low, if we bought more shares, how much could they grow? That much more than all these others? That looks like our best possible investment, right? In theory, that's the idea behind a buyback. Well, if the stock has dropped 45% from whatever high it traded at, there's a good chance that that's realistic. If in fact the company's business systems are secure, and the business model is valid and solid, and that they are going to make money, well, I tend to think that Spotify's model is solid, because podcasts are such a thing now. I mean, I remember when they first came out, when the idea of just listening to somebody on a podcast was available. I thought, Audible, Talking Books. I mean, just people listening to weekly radio shows. I mean, it's just talk show. I mean, it's definitely not even without commercials, right? It's just sort of daily talk shows. Why is that interesting? But over the years, it's become more and more interesting. And I think it has more to do with the dynamics of how people arrange their days, how people work, and what people do with their time. A podcast is something you can just put on while you're driving, while you're traveling, while you're doing something mundane, data entry kind of work or whatever. There's a lot of ways. Riding a subway is a really good, public transportation. Listening to a podcast is really good for getting through that kind of situation. So I feel like that there are a lot of people that kind of have found ways to do what they feel is like enhancing the value of their time. Listening to music's fun, yes, but when you listen to a podcast, there are so many cool podcasts out there that help you feel like your life is that you're more in control of things. People really want to feel in control of things. And listening to a podcast explains stuff to you. And when you get an explanation, you're like, oh, I understand what's going on now. That can help me, I mean, whether it's self-help or, Joe Rogan is the #1 podcast. If you have never listened to a Joe Rogan podcast, it's probably worth just browsing through a few of them, snippets of them on YouTube, so that you understand why this guy's the #1 podcaster in the world. I think I have great respect for what I see Joe Rogan do, that he approaches things with such an open mind. Oh yeah, there's things he's not open-minded about, but there are a lot of things he is, and he uses coarse language, and some people feel like, yeah, that's cool. This guy's street cred, whatever. But the reality is that you just listen to him for 10 or 15 minutes, the way he listens to a guest, and takes them seriously, right? So they got this guy that talks about, I can't remember, it's Larry somebody, that talks about UFOs. And Joe listens to this guy and takes him seriously. Now, there are a lot of guys who he doesn't take seriously. He's like, no, they're all full of it. But this guy he listens to. And then as you realize, well, look, if Joe is listening to him, and Joe has an open mind, but Joe's also skeptical to a certain degree, if he's listening, then I better listen, right? The minute you realize that you care about a podcaster's opinion like that, then that guy is likely to become more popular, because he represents an uncommon level of value in his opinion. And Joe Rogan has achieved that very well, and I respect the way he's achieved that. But why am I saying that? Well, because that's who's on Spotify. And it's not just him. There's lots of people on Spotify that have become very popular, very successful, made a lot of money doing their podcasts. And yet the people who are paying that money to these gurus, they feel like it's been worth it. They feel like their value is enhanced with the money that they pay. So if Spotify is that platform that is letting that happen and encouraging and making that happen, I think it is a sound business model. And if the company actually isn't being, deceitful, and they're saying, we think our company is a big value. All right, there's a long explanation. Sorry it took so long. But then I'm interested. I'm interested to see, really, even after all of this, could this be the bottom? Well, there is one big reason why this particular trading activity, if it represented the bottom, would mean that from here, Spotify could be a fantastic buy. And that is the study on gaps. I built a trading strategy around this study when I read it clear back in 2013. And that's when it was published. The study was actually done in 2011, but took a couple of years to get it just right. And it's a study in the Journal of Technical Analysis about gap trades. And what they concluded was when a gap trade signals the potential for a change in trend, then that is much more valuable than usual. And not because it guarantees that it will. It's just that any of the trades that do work out are so above average in value that it's worth playing them as a system of trading. So we don't know if Spotify is going to, just tank and go down. But every time you come across this kind of thing, down, gap up on a stock with a legitimate business model, it's probably worth paying attention to. Okay, wait, I don't want to compare. I want to put on a moving average. The 10-day moving average turns out to be a really interesting indicator when you're talking about trend changes. Okay, that's a 9-day by default. I'm going to just change it to 10. There we go. This gap strategy, the gap strategy I use has three characteristics. One, it has to open higher and leave a window. Two, it has to close higher for the day. Three, it has to cross over the 10-day moving average. If it does all three of those things, there's better than 60% chance that it is going to outpace the S&P 500. There's probably a better than 65% chance that it's going to close higher in the next 20 days if, in fact, the S&P 500 is uptrending, which, oh yeah, it is. So this trade is pretty good. Is it Joe Rogan and UFO? Okay, you're all right. Anyway, I don't want to get further down that track. Some of the day into it. So what we got here though is if you buy this gap trade, you look to buy at the open of whatever it is today. That's how this would go. Let me go ahead and reconnect the paper trading so we can see what the pre-market number on this is. Big wide 218 by 223. 223 is way up there, but 218 is 218 is up. Okay, so yeah, we're gapping up into brand new territory on Spotify, which explains because that's why I saw it in the pre-market. So we're way up here with Spotify, somewhere up in this range. And that tells you that gap is following on. People think, I probably should have made this my number one trade for the day. Here's how I would do this. I would set that as my stop loss, get in wherever I get in, and then whatever the distance is that I get filled at, I'd take half of that. So that stop loss is going to be 201 something, and I'm going to get in at 220. That'd be a $19. Well, let's just make it even numbers, right? We'll go 200 is the stop loss, 220 is we're in, 230 is we're out. That's how that trade would set up. I'm actually so interested in this trade, though, that I'm going to 230. Just want to see what it looks like visually. Okay, change some colors around here. Make that one blue. Make that one red. Is that really 230? That's interesting. 220 needs to come down a little. We'll leave it there. But you get this. This is 220, 200, 230. All right. And this one actually could be a nice long running trade. I'm going to do what I don't usually do, and that is actually put in two stop loss orders. I'm interested in getting this thing wherever it comes in. So I shouldn't put the stop or the take profit target on, because I want to go, I don't know where I'm going to get in. I do know that in this case, I'm going to actually get in with a market order and a stop loss, though. The stop loss is going to be clear down at 200. So that's going to be like 2,000 pip move to the downside. Yeah, 119. Okay, well, that's what we're going to do. We're going to go $20 lower, and the risk. See, I'm only going to be able to buy 115 shares of that because I'm taking that much risk, and that is far enough away that there's a good chance that I will get the chance to raise the stop loss and just let it trend higher. So I'm not going to put the profit target on, but mentally I want to watch this. I want to say, if we get to 230, I want to consider taking the profit if I think, we're going to get back into our downtrending ways. All right, so that's going to be that situation. I'm going to actually set that in. That's right. I can't do a market order because it's all right. Well, then I'll put it in as a limit order, and I'll put it at 220. Anything up to 220, I'm fine with. And there's my stop, and then we'll go 115, and that order. There we go. Now it's in. All right, great. So we'll see how that works out. Whether or not we actually get in stop today or spot today, and also get a stop on it. All right, there's that. Now then, let's the third one was Macy's, right? Let's have a look at Macy's. Now, if you look at this, you're like, $200 stocks, I can't afford that. Okay, whatever. It's all a matter of shares. You can afford $200, you can buy one share. But if you like buying lower price stocks, some people, that's a mentality. I got to buy low and sell high. If that's where you are, then you might be interested in Macy's. Look at this volume, steady volume, and then kapow. Macy's, are we kidding here? Retail, go in and buy this 20-something wardrobe, and it's not even, nicely made necessarily. Macy's has done a good job holding their level, their perception of quality, unlike, say, JCPenney's, clothing store that built its business model on discounting everything. Yeah, it's our price, but we're going to send out coupons. It's like you never pay full price for anything in the JCPenney store. That's what people came to understand and believe. And their coupon sending was so prevalent. People would walk in with 2 or 3 coupons and say, well, which one pays the best? But they would never buy just regular. And that actually began to hurt the store after a while. But Macy's didn't fall into that trap anyway. They did, like all other retailers, struggle with the COVID situation, the pandemic. But unlike all other retailers, they have shocked everyone with their ability to manage costs and pull out profits. My guess is that they've, really worked their online sales in some way, but whatever. Look at that difference. They were estimated to come in at 123. They came in at 129, way above, right? And yeah, that shocked everybody, brought up to old highs. But more than that, we got follow on. And look at that volume. Huge day. Yeah, you would expect that with that kind of news. But the next day, also very strong volume. The party's not over. It's hanging around, right? Now, this is a gap, and then that's the next day after the gap. I wouldn't necessarily want to buy Macy's up here. I feel like let it come down buy it back around this area here, 2150 or so, or between 2150 and 22 at least. Buy it down in here as it sort of dips, and then be ready for the upward move. So this didn't hit my today because this doesn't look like today is the day. Yesterday was, Friday was the day. Big gap, buy in. See, that's what you want from that gap trade. But this is a blue sky trade, that is to say, it broke all of its highs. It didn't come down and then gap, and the gap was a potential change in trend. The potential change in trend is more valuable for gap trades than blue sky. They're both good, but the trend change is even more valuable, which is why it was all over Spotify the way it was. Okay. We got 5 minutes left, and if you have questions, if you have a stock you want me to look at, I want to have the opportunity to do that real quick before the market opens, and we can see whether Pfizer does anything. So if you have that, chat that in right now, and then I'll be sure and take a look at those. Meanwhile, let me just double check the pre-market stats here, courtesy of Market Chameleon, and which I love this website, by the way. I'm going to sort by market cap. That's the way they were before, so that we were looking at the biggest companies, not necessarily the ones gaining the most. So they're not sorted by, it's just by market cap. What is up there? NVIDIA is still up there. Pfizer is still up there. Pfizer's kind of dropped back a little bit. It's 5017, but 1.6 million. So just in the time we've been talking, another 600,000 shares have been traded on Pfizer. That was probably you guys, right? The 1.6 million have been traded in the pre-market. So, inching closer to 10%, call it 7% so far of its pre-market volume is getting traded. That's big. That's significant. And notice this one here, Moderna is also going up higher, right? Moderna and Pfizer together, both. If this one's going higher, then that one's going to go higher too, and vice versa, except between the two, Pfizer more than Moderna. So all that's just confirmation bias. I'm seeing stuff that makes me feel good about the fact that, how does AstraZeneca doing in comparison? It was heading down. Johnson & Johnson or Moderna for comparison, Pfizer. And so Pfizer non-tech. I'm not sure what non-tech's all about. Okay, so let's go look at Moderna so that we know, because it was talking about that. Pfizer is in the pre-market. Pfizer is looking stronger than Moderna. Yeah. So what is Moderna doing pre-market? Is it up? It closed. Where did it close? It closed at 383. Yeah, it's 390. Right. Yeah. So that's good news for both of these trades, and it's probably all on the UK headline. But if Moderna is up a little bit, then that could be the potential for that sort of pullback to be done. Maybe we're going to go make a run at the high. I really feel like Moderna got overdone, overbought through all this. And so I feel like it's going to have a harder time making it back. Pfizer, on the other hand, is sitting there right next to its high. I feel like it didn't run as far or as fast as Moderna did. And so, people were not as interested in it because they didn't think it had as much room to go as Moderna did. But I feel like today's action and news kind of makes people feel like, oh, maybe it does have farther to go. Oh, they have a new name. Okay, Pfizer non-tech. Got it. Then let's see. Thanks, Helen. Johnson & Johnson. Yeah. So it's that whole thing. This is. Oh, hey, thanks for bringing up J&J. Yeah, so we're not seeing news headlines on J&J that are creeping in, but that's brand new stuff. And it's probably, I would be surprised if the other two are up. This isn't also 178. Where did it close? 179. So this is down. That's funky. Why not to reason why? It's down here compared. So for whatever reason, the market's not as excited about J&J today because, well, there it is. You see J&J drop down. Okay, looks like we got the Spotify trade put on at 218. Nice. So J&J, yeah. What's J&J likely to do? Break through and go and continue higher? Good chance that it would. Let's run over and look at the Pfizer trade since the market's open. So there's Pfizer opening up where we said that it was close to that it would, and the paper trade for Pfizer. That order's still on. What was the? Oh yeah, I was gonna wait until it came all the way down to 50 to get that in. So we'll see. We'll see whether or not I get that. Yeah, we're almost there. That should come in any second. I love the fact, see how the price is up there? It's hanging up there right now. I might have been too conservative about where I put that order, but the fact that it's up there means there are people buying it, even at that high price. There it comes. Yeah. Okay. So gotta love the fact that I was patient enough. Now we'll see if it just tanks. You never know. But the setup is right. We saw some buyers. We waited. We got a reasonable price. Could have even done better, but you never know about that. And then we've got a real generous stop loss on this. So going to be plenty of time for it to turn around, hold that gap if it will. I think it will, and then we'll see how the trading volume winds up for the day, whether or not it's strong. The stronger it is, my prediction is the more buyers that will represent. They're all making a COVID-based, or I would think J&J should run up too. Yeah, you would. Here's the thing, though. For whatever reason, the J&J booster doesn't get as much love from U.S. and U.K. governments. I could go on at length why I'm fairly certain that is true. But I'll leave those aside. What I am saying is that it's just the case that Pfizer and Moderna, the perception is that Pfizer and Moderna have their hooks in more opportunity for getting government funding for vaccines. So if the governments are going to pay for the vaccines, those two companies are going to win more than Johnson & Johnson. So I'm pretty sure that's just the nature of this dynamic. But AstraZeneca has really been interesting because they've almost had no impact from COVID and pandemic remedy opportunities. So right here, they're not gapping up, but you got to like the trend. It's just look at this whole post-COVID situation. They fell like everybody else. They jumped up, and since then they really haven't gone anywhere. So I feel like if you're interested in AstraZeneca, you got to be interested in something else besides their vaccine situation, because investors and headline makers just aren't, analysts are not connecting the dots between AstraZeneca and pandemic move. Okay, before I leave, I do want to look. There it is, Aussie yen. It tanked in those last 20 minutes before, but then jumped up. NASDAQ also moved up. So I feel like all of this is tilted towards a continuing bullish sentiment, and that there are likely to be good bullish plays throughout the day. I really like the semiconductor space as a place for where to find those. Let's just, there it is, AMD making the breakout I was talking about. Now, you could wait You could wait until this day is done and then jump in and buy, or you could do it right now. Either way, you would want to put your stop loss below the lowest point of the flag pattern right there, and not just instantly below it. You want to give it a little room, probably around $100 and 50 cents, something like that. Would be a reasonable, give it some room, because if it's going to fluctuate and turn around, the opportunity is clear up into the 120s, mid 120s. This could be a fantastic move, but you'd want to give it some room to get there. NVDA, yeah, NVIDIA continuing into that blue sky territory. So as I said, these actually look really good for the upcoming week. All right. Oh, a comment from Michael Chappelle. Is this basically a monopoly? The COVID thing? Well, if you're talking about Pfizer having a monopoly, let's say Pfizer, there's another company though. What's the other one? Anyway, Pfizer has the monopoly on government funding. One customer, government, one company, Pfizer, and then Moderna is the other one, but Moderna is like the research behind it, and then Pfizer is the big distributor of it. Monopoly between those two, monopoly on the government's money, yes. I don't know why Johnson and Johnson couldn't. I mean, maybe they. No, I can't even say it. But it looks like it. But that would be an unofficial monopoly, right? What do you call it when one company gets the favor of one government? You call it corruption, is what you call it. But monopoly, strictly speaking, it isn't. Functionally, it is. But anyway, so we'll move on. And until next week, take care and trade well.